Gentlemen, good
Ladies
day
and
and
gentlemen,
welcome to
good day
Q2 and
and welcome
H1
to the
FY26
EIL
earnings
Engineers
conference
India
call of
Limited
Rupa and
Q2
Company Limited,
FY26
hosted
earnings
by
conference
MUFG
call
India. As a
hosted by
reminder,
DAM
all
Capital
participants'
Advisors
line will be in
Limited.
listen-only mode,
As a
and there will be
reminder,
an opportunity
all
for you to
participant
ask
lines will
questions
be in the
after the
listen-only
presentation
mode
concludes.
and there will be an
Should you need
opportunity
assistance
for you
during the
to ask
conference call,
questions
please
after
signal
the
an operator by
presentation
pressing star
concludes.
then zero on your
Should you
touchtone
need
phone.
assistance
Please note
during the
that this
conference
conference is
call,
being recorded.
please signal
I
an
now hand the
operator
conference over
by
to
pressing star
Mr.
then
Omkar
zero
Bagre
on your
from MUFG
touchtone phone.
India. Thank
Please
you,
note
and
that
over
this
to you,
conference
sir.
is being recorded. I now hand the
Yes, thank
conference
you.
over to Ms.
Good afternoon,
Bhumika
everyone.
Nair.
I welcome you all to
Thank
the
you
earnings
and over to
conference
you,
call
ma'am.
to discuss Q2 and H1 FY26
Yeah,
results
hi.
of
Good evening,
Rupa
everyone.
and Company
On
Limited.
behalf of DAM
On behalf
Capital,
of
I
Rupa and
welcome
Company
you
Limited,
to
I'm delighted to welcome you all to this call.
of
Thank you for
Engineers
taking the
India
time out
Limited.
on this call to
We
discuss
have the
our
call
latest
today
financial
being
results and
represented
performance.
by Mr. Sanjay
To
Jindal,
discuss our results, we have
Director
with us from the
Finance,
management
Mr.
Mr.
Surendra
Vikash
Patil,
Agarwal, the
Company
Whole-Time Director,
Secretary
and
and
Mr.
Investor
Sumit
Relations,
Kovala, the
Mr.
Chief
R.P.
Financial
Batra,
Officer. They will
Executive
take you
Director
through our
Finance
results
and
and then we'll
Accounts and
proceed
IR,
to Q&A
Mr.
session.
Amanpreet Singh
Before we
Chopra,
proceed
Senior
to the
General
call,
Manager,
a small
CMD
disclaimer.
Office
This
and IR,
conference may
Mr.
contain
Vivek Meena,
certain
Senior
forward-looking
General Manager,
statements about the
Marketing,
company
BD
which
and
are based
IR,
on the beliefs,
and Ms.
opinions,
Neha
and
Naruda,
expectations
Senior
of the
Manager,
company as on
Company
date of this
Secretariat
call.
and
The
IR.
actual results
At
may
this
differ
point, I'll hand
materially.
over the floor
These
to Mr.
statements
Jindal
are
for his
not the
initial
guarantee of
remarks,
future
post
performance
which
and
we'll open
involve
up the
risks
floor
and
for Q&A.
uncertainties
Thank
that
you,
are
and over
difficult
to
to
you,
predict.
sir.
A detailed safe harbor statement
Thank you,
is
Ms.
also given
Bhumika.
on the page 2 of company's
Good
investor
evening,
presentation.
everybody, and a
Now I
warm
would like
welcome
to
to all the
hand the call
investors who
over to
are
Mr. Vikash
attending the
Agarwal.
investors
Thank you and
call.
over to you, sir.
We have declared our financial results
Thank
for
you.
the second
Good
quarter
afternoon, ladies and
ended
gentlemen.
30th
On behalf of Rupa
September
and Company Limited, I extend a very warm
2025.
welcome to all the participants
Our order book
joining us
status
today
is,
for our Q2 and H1
has
financial year
reached
26 results on conference.
its all-time high and stands at rupees
Business conference call. We appreciate your continued engagement
13,131
and I
crores
trust you have
as on
reviewed the financial results
30th
and
September
investor presentation
2025
available on the stock
as
exchange.
compared to rupees
In the second quarter, we recorded a
12,145 crores as
broad-based
on
recovery
30th
with
June
positive momentum across key
2025.
categories,
Order inflow
underpinned by our
in year
focused
up to
execution and
second
strategic
quarter of
execution.
financial year
With rapid,
25-26
calibrated pricing
stands at
approach,
rupees
improved channel programs and focused
3,765
marketing
crores.
initiatives to drive volume
We have
growth,
declared results of quarter
enhance
and half
competitiveness
year
and reinforce
ended
our market
September
position.
2025
Revenue
on
for
14th
Q2 financial
November
year 26 grew by
2025.
8%
As regards
year-on-year,
to financial
supported by
performance
robust
for 3 months
14%
ended
volume growth,
September 25,
driven primarily
the
by
company
strong
has
traction in
registered
economy and
turnover of
mid-fuel
rupees
segment.
900 crore,
While the
vis-a-vis
mid-fuel
rupees
segment led the economy
676 crore
segment in the
in the
growth
second quarter
phase,
of the financial
the
year
focus ahead is to
24-25.
reignite momentum in the
Turnover from
mid-fuel segment
consultancy and
to
engineering
restore
segment
contribution
stood
balance
at
and improve margin
411
profile.
crore and from turnkey segment at
Exports continue
rupees
to deliver strong
489
performance
crore.
with year-on-year
During
growth
the
of
current quarter
28%,
ended September
contributing 4%
25,
to the
the
revenues
company
in the
has
first half
recorded
of financial
profit
year
before tax
26.
of rupees 150 crore
Modern trade,
and
including e-commerce,
PAT of
continued the
rupees
steady momentum, contributing
115 crore
8% to the
in
annual
comparison
revenues.
to rupees 100
Summer
crore
wear contributed
79
30% of the
crore
quarterly
respectively
revenues.
during the second quarter of financial year
While the measures undertaken
24-25,
have strengthened
showing an
primarily
increase of
offtake, we remain disciplined in working
50% in
capital
the
management.
profit before tax
The company
and around
generated operating cash
45%
flow of
in the
23
PAT.
crores during the half year.
Notably, EPS
As
for
of
the
30th
quarter
September
ended September
2025,
25 stood
gross
at
cash and cash
2.04,
equivalent, including investment,
vis-a-vis
stood
September
at INR
24 at
258
rupees
crores,
1.41.
while the net cash after
Operating
discounting
margin during the
borrowing
second
stood at
quarter of
18
financial
crores.
year 25-26 stood at around
Looking
rupees
ahead,
102
while
crore,
competitive
that is
intensity in the Indian
11.3%,
industry continues to
vis-a-vis
remain high,
rupees
we believe
47 crore,
our
that is
calibrated pricing
7%
approach,
during the
improved
second
channel
quarter of
programs, and
24-25.
focused marketing
EBITDA,
initiatives will
including
reinforce
other
our position
income
across
of the
our
company during second
across
quarter
core categories.
25 stood at
The
around
focus remains on driving volume-led growth
160 crore.
in near
EBITDA
future,
margin
near
is
term,
17%
and
in
restoring market
comparison
balance
to
through mix
110
optimization
crore
and
EBITDA
operational
margin
efficiency.
15% during the second quarter
With this, I would
24.
now like to hand over to our
In
CFO,
the
Mr.
first
Sumit
half
Kovala, to take through the
year
financial
of
highlights of the quarter and half
25-26,
year.
the
Over
company
to you.
achieved a turnover of rupees
Thank you, sir, and
1,757
good
crore
afternoon to everyone.
in comparison to
Thank you for joining
rupees
us on the quarter
1,287
two and
crore
H1
in the first half
FY26
year of
earnings call.
24-25,
I will now take you through
showing
the
an
financial
increase of
highlights
around
for the
37%
for quarter
with
two
turnover
FY26.
from
Revenue from
consultancy and engineering
operations stood at
segment
320
amounting
crores,
to
registering a
rupees
growth of 8%
819 crore
year-on-year.
and rupees
EBITDA for the quarter stood at 22
938
crores,
crore in 20 segments. For the half year ended 30th September 2025, the company recorded profit before tax of rupees 243 crore and profit after tax of rupees 185 crore in comparison to rupees 174 crore and 134 crore respectively for the half year ended 30th September 2024, showing an increase of 40% in PBT and around 38% in PAT. Operating margin first half year of financial year 25-26 stood at around 9.3%. EBITDA, including other income of the company for the first half year ended 30th September 2025, stood at around 265 crore. EBITDA margin is 14% in comparison to rupees 195 crore for the first half year ended 30th September 2025. The company is maintaining a healthy EPS of rupees 3.29 for the first half year ended 30th September 2020. On the consolidated front, the company earned a profit of rupees 83 crore for the quarter ended 30th September 2025. For the half year ended September 25, the profit stood at 149. Now it's over to Ms. Bhumika.
Reflecting our robust cash position. We remain committed to maintain financial prudence and cost.
So we'll start with the Q&A.
To invest behind the brand and growth opportunities.
Okay.
Our focus remains on improving.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles.
You may press star and 2. Participants are requested to use handsets while asking a question.
We take the first question from the line of Amit Anwani from PL Capital. Please proceed.
Hi sir, thanks for taking my question. And congratulations for the very strong execution which we have done. So now my first question again on execution. We have already done kind of 33% growth for first half to first half. And I recollect you guiding about 20% plus for full year growth. So now are we changing that stance since the execution has been quite strong in H1? So just first thing wanted to understand on the guidance, and second on the order prospects for next 6 months. We understand that you have won one international consulting order again in Africa, which you announced about 600 plus odd crore. And H1 intake is roughly about 3,700 odd crore. So what is the full year target now, and what are the prospective orders? And on the execution, are we changing our
Okay, sir. And my next question is, can you throw some light on the thermal performance that we have, and what is your order book for the same?
25% plus. And we will stand by our margins.
It shows a volume growth of approximately 20-24%.
Consultancy business, and in the LSTK we will maintain 6 to 7%.
So we have a good
profit.
order book.
And for the rest of the
we expect that
portion, Mr. Vivek Mehta will answer.
Hi Amit, this is Vivek. Update you on the business prospects of it. As of today, we have already crossed.
Okay. Thank you, sir, and all the best.
Okay. And we are moving towards our last year's target, 8,000 crores. They are going to definitely cross that 8,000 crore mark.
A reminder to all the participants that you may press star and 1 to ask a question.
Internationally, when you were talking about this project,
Next
we have been
from the line
able
of
to spend around 1,600 crores from overseas. So this year in the consultancy segment, overseas has contributed more, and we are targeting major projects more.
So, few quick questions from my side. Can you just give us a walk regarding the future plans on the CapEx?
So, prospects are good. We will definitely cross the last year's mark, and it will go beyond that.
For FY25.
So that's great to hear. So one thing is that you highlighted 1,600 out of 4,000, that is 40%. So are we eyeing for 40% plus consultancy contribution in the 8,000 plus order inflow which you're going to have this year?
We expect that it would be remain
It would definitely be as part of consultancy.
And on quarterly
normally
basis?
it remains around
quarterly basis, it's 5.1%.
Within the
And
consultancy sector.
overall, the
it would
guidance
be
is 7,
somewhere around
7.5%.
25%.
Understood, sir. And my last
Right.
question was regarding the working capital days
Second
for the
question.
quarter and the yearly guidance.
Second question on, I was just observing the revenue from consultancy overseas, which was kind of 85 to 100 crore last year, quarterly run rate. And now this year it is about 70 to 75 crore quarterly run rate, despite the overseas consultancy order book has been massive. We won massive orders last year also. So any particular reason of this not picking up? In fact, it has declined the overseas consultancy revenue this year.
Actually, till now, our
Thank
major
you.
client
A
was
reminder to all the participants that you may press star and one to ask a question. Next question is from the line of Richa Shah
Now these
from SRB
projects
Associates.
are
Please go ahead.
going to be tapered because
Hello,
the work
sir.
has been completed.
As it can be seen
But
that the growth during
since
this
we have
quarter was
got
led
good
by the
order in
economic
the
segment.
24-25
So, could you tell us what
itself
initiatives led
foreign
this
trade
growth in your
so
segment?
that business has started execution, taking on. So
It's largely because of price competition, ma'am. So we were holding our prices and all, but since
results of
intense competition,
or massive order
we are also going
foreign
a little bit with the price war, compromising the
Understood,
margin
sir.
for a short
And are we targeting the similar 50-50 mix, or since the turnkey was very strong this quarter, so what is the mix we are expecting for
Keeping
this
in
year
mind the
now?
earlier guidance which we
on
have
annual
given for
basis,
Q2
it will
EBITDA margin was
50-50 or
8 to 9%.
52-48%.
But this quarter we only delivered 7% margin. So,
Lastly,
could you
sir,
put light
on the
what
losses
quantitative
from
bridge
associates,
to
I am
reach
assuming
in
that this is because of the
FY26
shutdown
margin
and
back
Ramanandam.
towards
So
FY25
just an update on that, because I think H1 basis, the losses has been massive, and on the PAT level, the numbers are lower because of that, despite very strong performance. Just wanted to understand an update on Ramanandam. Thank you.
on the margin side, we have
In this
to compromise on that.
quarter, Ramanandam project was under shutdown for
Okay, sir.
45 days
Thank
out of
you.
90 days. So in this quarter also, we have loss of around 25
Thank
crores.
you. A reminder to all the
In
participants
the
that
third
you may
quarter,
press
the
star and one
project
to ask a
is
question.
that project
Next
is
question is from
plant
the
is
line of
going well,
Prashant, an
and
individual
we are
investor.
expecting
Please go
profit
ahead.
in the third quarter.
Hello,
And we are
is my voice audible?
we are definitely expecting.
Yeah. So my first question is, you have already alluded to maintain the top line and revenue. You have provided schemes and, you have benefited, provided more benefit. So,
Understood, sir. Thank you so much for answering
is there any
the
plan to
question.
reclaim the, net
Thank you.
realizable price, or this will continue? I mean, those
Take the
schemes
next
and
question
rebates
from
and
the line of
general
Mohit Kumar
discounting will
from
continue for
ICICI
the rest of the year
Securities.
also.
Please proceed.
Yeah, of course, we don't want to do that, but in quarter one,
Thanks for the
we were
opportunity.
sticking to our original policy.
Congratulations on
But
the
as
very
said,
good
for a
quarter.
short term,
The first
we
question
have
is
to
on
match
the EBIT margin for the consultancy was existing this quarter is
for a quarter or two,
28%.
we might follow the
Is there any one-off in the any one-off which we should be aware of?
There are marketing initiatives in place. So once that also runs in parallel, I'm sure we'll have
So
Your
the
question?
EBIT margin on the
so in a way, it indirectly also says that there is no
28%
product
in the quarter.
differentiation, and basically the channel does not see any differentiation between this company's products and competitors.
The
And
margin
price
on
is
the
the only
consultancy,
differentiator.
EBIT margin.
So, in that case, whatever spend we are doing on marketing, advertising, that is not providing any leg up or any support in maintaining the price. Would that be a correct assumption?
We will be able to secure our
Of course,
margin
it
of
helps,
around 25%.
but the competition in terms of parallel brands is so intense because of whatever reasons. For short term, yes, but long term, definitely these
Has
activities.
there any outlook on the domestic consultancy or the inflow or pipeline? We were also there was an RUCL part of the phase 2 project.
Please tell me.
Is the tender out?
We to absorb the operational cost.
with respect to the IOCL Paradip, there is no tender.
So finally, if it comes down to maintaining top line at the cost of, by discounting the prices, is there any, can we see that in the in the near future, at least the advertising expenses will be reduced so that, at least some sort of EBITDA and profitability is maintained?
When the phase 1 is completed.
That is what we as a management, we need to strike a right balance.
Is it right to say that
we have a different strategy, we have a different strategy.
Is it right to say that the phase 1 was merely 100 crore worth of project and phase 2 will be much larger? If I'm not wrong, it should be around 900 crore. And when it is booked in this fiscal, will it is booked in this fiscal year, the balance phase 2 or next year, next fiscal?
It should come towards the end.
Any plans of expanding into new geographies to compensate for the lessing, to increase the volume?
That is a continuous process, and as I've shared our numbers, whether it is in terms of export or modernity,
we are hopeful that by the end of
areas, we are extending our reach.
Phase 1 should be done, and they should get the clearance, or otherwise.
Definite numbers, like in quarter 3 and quarter 4, how many retail touch points, how many distributors the company is planning to add?
Mostly order in pipeline which we are looking at in H2. Are they 27?
Revenue growth by the year end.
You have this Andhra refinery which is going.
And in terms of capacity utilization for our own units, what was the capacity utilization for quarter 2 and H1?
Similarly,
around 75%.
There's a petrochemical complex.
Okay. The constant, quarter 1 to average, H1 it was 75%.
There could be some small specialty chemical projects, various studies are done by implementing the various specialty chemical projects. So those are expected to come.
One last question from my side. In terms of channel inventory, how do you feel that the channel is placed? Are they overstocked? Are they have the right amount of inventory? What is the risk of sales return or
product return? We take the next question from the line of Pratik
at the moment,
from Intelsense. Please proceed.
Yes, sir. My question was on the ride back that we have done. I think about 35 crores of ride back. Can you, sir, give a light on as to which project this was and when was the provision actually made in the past for this 35 crore amount?
Actually, this provision relates to one of the that provision is kept for the.
And just on this, you mentioned that advertising and promotion is around 7.5%. So without advertising, the sales promotion discounting, what would be that as a percentage of sales?
In the piecemeal basis. So in this quarter we have got the
promotion discounting rebates.
And sir, like you said, it's on a piecemeal basis. So is any other amount that is we are expected to receive on this?
Cash discount,
small portion is balanced. That will be.
So this will include cash discount, turnover discount, rebates, and other schemes and everything.
Yeah. Okay. Just sir, one last question. In our last phone call, we had mentioned that there were several projects which were, in advanced negotiation stage. So, in this, this quarter orders, have those materialized or still we are expecting those kind of orders?
From SK Associates.
You can see our order book of.
Thank you so much for the opportunity. I would like to know that with 14% volume growth and 8% revenue growth, how much of Q1's primary offtake gap is fully recovered? And what is the implied H1 volume growth versus last year?
Okay. Thank you.
H1 volume growth is around 3%. And,
thank you. We take the next question from the line of Saket Kapoor from Kapoor & Co. Please proceed.
Yeah, Namaskar team and धन्यवाद sir opportunity के लिए sir. Sir, firstly sir, we were also looking for some diversification in terms of moving away from the oil refinery space and then looking for the hydrogen opportunity.
And also you have mentioned the focus towards reigniting the mid-premium and premium segments. Could you tell us what changes are being implemented or what are the strategies you are developing to achieve this?
With respect to the
increasing our marketing reach and having the sales and marketing team, we are robushing the marketing team higher.
Today, our infrastructure business is almost more than the hydrocarbon business. That's a major diversification. With respect to the new areas which we have talked about, like hydrogen हो गया या और coal gasification हो गया और biorefinery हो गया. Biorefinery, you know that we have already done one biorefinery, Bamboo-based biorefinery. Right. This year we have been recently we have been awarded one assignment for coal gasification from the coal to SNG by NTPC. वो हमें अभी मिली है assignment which we are executing. We are anticipating this kind of assignments from other clients also. We are in bidding process for various projects.
So thank you for the opportunity and a couple of questions.
Sir, when we look at our capital investment in the various JV, is Ramagundam fertilizer is there, and then sir, we have a small stake in the Numaligarh refinery also. So, what has been the contribution, and if any, in terms of any dividend and how is the performance there? I think so. Our major investment is for this 4% stake to the tune of 834.
And the volume and value growth for the quarter is around.
It will be coming in the next quarter. Another dividend will be coming in the next quarter. So
they are basically for the annual that we are targeting.
So they are giving the limited dividend. In the last financial year, they have given the substantial dividend, but going forward, they are investing the money for their new project. So whatever dividend they have declared for the last financial year, that will be coming in the next quarter.
Schemes and discount perhaps.
So what was the amount, sir, last year? How much you have received?
Pricing
in this year, around 20 crore will be coming.
Where do you stand now on hitting?
Is that any steps, we will hold on to this minority stake of 4% in the total realm of things? We are only holding 4% of the entity. So, or we can also look forward for this investment, divesting this stake.
Is it right to assume that?
Actually, at this moment, we have
stand now on headline pricing versus
whenever opportunity comes, we will review it.
3 and for maybe a quarter or two.
And also, sir, we have two assets investment also under net line.
But at the same time,
already you have mentioned that during the bidding stage, there was the project cost for envisaged at 300 crore, as mentioned in the presentation. So we have not invested anything on these assets.
Overall, it should help us to.
As of now.
We are not investing any further. Basically, whatever investment was done is done.
Understood, sir.
So we are not anticipating any further investment in this.
Thank you. That's all from my side, and all the best for the future quarter.
And lastly, sir, with the reversal of this 35 crores because of the Nigerian and no defect of the project which you mentioned to the other participant, that means net of that has moved up the profit by that amount. So we need to factor in that number in terms of the profitability.
Sir, actually,
that is
that modern trade and e-commerce contributed 7% of revenue in H1 FY26.
Because provisions are reversed whenever defect liability period of the project is over. It's a routine business for the year. Some of the provisions are created and some of the provisions are reversed. So this is not a cause of worry for the year.
What is the net of impact? How much provisions we have made, if any, for this quarter or for the first half, and how much has been reversed in totality?
For this quarter, it is reversed on overall basis. I think it is -12. But in the last quarter, it was on positive side. So sometimes it is on positive side, sometimes it is on negative.
As per contractual provision, we create the provision, and as per the contractual provision, we write it. So this is a continuous process over the tenure of the project. The provisions are created when the project is completed, and in case any liability does not come,
we are looking for at least 20%
so
growth.
it's basically a continuous process.
In the coming time, some more projects are
And sir, thermal wear contributed 13% of revenues this quarter. Do you expect this contribution to sustain or expand in the
upcoming? Lastly, on the cash on the books, and what steps are we taking? How can we create value through that cash, through sharing with investors, or what is the best possible way? What is the closing balance, the cash balance we have? And what are how are you looking forward to deploy that?
Currently, all the cash is being deployed as per DP guidelines, and we are constantly looking for the investment opportunity where the capex are lower and standalone facility. Whenever we get a good opportunity, definitely EL management will consider.
Thank you for joining us on the call today. I would like to thank the management for sparing the time and answering all the queries. We are
closing balance, can you confirm?
Investor Relation Advisors for Rupa and Company Limited. For any queries, please feel free to contact us. Thank you, everyone, and have a great day.
Thank you so much. Thank you.
Right. Thank you, sir. All the best.
Thank you.
Okay,
On the behalf of Rupa and Company Limited, that concludes this conference. Thank you for joining us.
Before we proceed with the next question, a reminder to the participants, in order to ask a question, you may press star and 1 on your touchtone telephone. I repeat, ladies and gentlemen, in order to ask a question, you may press star and 1 on your touchtone telephone. We take the next question from the line of S. Ramesh, an individual. Please proceed.
Good evening and thank you very much, and congratulations on your results. So if you look at the split between the turnkey and the consulting income, so if your turnkey revenue share is higher, it is a drag on your margins, right? You are talking about single-digit margins. So as a strategy, how do you view the split between the two revenue streams from consulting and turnkey, and how do you see your overall strategic objective of maintaining ROC for the business based on this blend?
Actually, it is definitely we have more segment profit in consultancy segment and less in LSTK business segment. But in the Indian economy, there is limitations on the consultancy business because at one time, mega projects are not more than 2 or 3. So whenever we are having opportunity in India in the consultancy business, definitely we are grabbing it, and we are expanding our footprints in international market also for the consultancy business. And with the balance man-hours, we are doing the LSTK job so that we can have a good turnover as well as good bottom line also.
If you look at this,
as a strategy, we are trying to maintain consultancy business around minimum 50%.
So basically, you are saying that overall you will be able to sustain your ROCE based on the top line growth and the cash flows. Is that right way to understand?
Basically, LSTK gives the top line, but consultancy gives the bottom line. So we are striking a balance between the two.
Okay. So in terms of the accounting in turnkey projects, when you book the income, is there any Ind AS impact and what is the percentage booking you do in terms of the overall timeline for the turnkey revenue?
Actually, in the turnkey business, turnover is coming on cost progress basis. It is not based upon the timing or billing. Once we get the project, the whole turnover is booked within 3 to 4 years because a mega projects take minimum 3 to 4 years. And that is the timeline for the mega consultancy as well as LSTK projects.
Okay. So, okay, fine. So in terms of your investment holding, you are getting about 12% return. If you look at the other income, the value of the investment in the standalone numbers. So, is there any strategic rationale for holding on to these investments, in Ramagundam Fertilizers, for example, or the other companies, given that the returns are not really what you would expect from equity investments? What is the management thought process on the equity investments? Do you expect the returns to go up in future, or is there a thought process in terms of exiting some of the investments which may not be corrected?
Actually, I think Ramakundam is a very good investment because India is feeling short of urea, and Ramakundam is able to generate minimum profits of 500 crore on annual basis. But we are facing some technical problems. That's why project is going for the shutdown on time-to-time basis. But we have sorted out the issue. And in the next quarter itself, in this quarter itself, the plant will generate the profit. So this is not a question of worry for EIL because our investment is safe in the Ramakundam project.
Okay, thank you very much, Vishwam. Yeah. Sorry, please go ahead. Yeah.
Thank you.
Thanks a lot, and I wish you all the best.
Thank you. We take the next question from the line of Mohit Kumar from ICICI Securities. Please proceed.
Yeah, hi. Thanks for the opportunity once again. So the question, this Ramakundam, I think, was making profit for last couple of years, right? So what has happened in last 2 quarters? The losses have been, the first quarter was 8 crore, I think. Second quarter is only widened, right? So is it fair to expect that from Q3 onwards you to start showing normal profit, or do you think this will continue for some more time?
Actually, we are facing some problem in stabilization, and definitely you are right. In the first quarter, there was shutdown, and in the second quarter, there was shutdown also for the 45 days. But now we have sorted out the problems, and now plant is running well, and definitely we are going to get profit in this quarter.
Understood. And the second question is on the order intake guidance for the full year. I think we have guided for broadly 8,000 crore kind of order intake. Is it fair to assume that PNC will be close to 5,000 crore order inflow for the entire fiscal, or will it be lower number?
You are talking about the order inflow?
Order inflow for the entire fiscal year 26. Out of 8,000 crore, how much could be the consultancy order inflow?
Out of 8,000 crore, it would be definitely consultancy would be somewhere around 50%. It's typically we maintain the balance of 50-50. Sometimes it is for 40-55%, 46%. It depends, but remains in this range itself.
So last year consultancy was very good. I think we did 44,500 crore. So I'm asking whether we can cross that number, or do you think it will be lower than that number?
We can. Depends. We definitely can.
Understood. And on the international side, I think the size of orders are getting slightly bigger. What is the size of orders, the large orders in the pipeline, say in the inquiry pipeline or in the tendering stage? I think is the pipeline growing, or is the pipeline is only small orders will come in bits and pieces?
So it is a mix of pipeline. We are working in Abu Dhabi. We are working as an engineering consultant with the group of companies. We have running some agreements with them. We get various smaller assignment jobs under that. We also get the bigger assignment jobs, bigger size jobs under that. Means 300 crore, 400 crore. So it depends. But we cater to all kind of jobs. We want to grab maximum so that our order is maintained. So we maintain the mix of that. Because the smaller assignments have a smaller period, but it gives you good revenue. The bigger assignments have more execution. It's a longer execution period. So that's one of the opportunity, but it is a mix of both.
Understood. Thank you, and all the best. Thank you.
Thank you. We take the next question from the line of Anupam Goswami from Third Life. Please proceed.
So, on the consultancy order that we won, the large order, what is our timeline of execution for that? And on the whole overall order book, how do you take it on the margins front and the execution timeline for the whole order book as well?
typically any bigger project will have a time schedule of 36 to 48 months. So specifically this project which we have won, it is around 36 months. So the turnover would be divided into basically the recovery would be in 3 years' time. In the first year, any new project gives only 10 to 15% turnover, and in the second and third year, it gives 25 to 30% turnover, and in the fourth year, it gives 15 to 20% turnover. This is the general trend.
Okay, sir. I'll join back in this. Thanks.
Thank you. We take the next question from the line of Rajesh Agarwal, an individual investor. Please proceed.
Sir, how much we have invested in Ramakundam project, and what can be the annualized normal profits if everything is okay?
We have invested around 491 crore in Ramakundam project.
Okay.
And when everything is okay, it will generate minimum 500 crore profit, and our share will be 26%.
26%. Okay. And now things are normalized, sir, there?
Things are normalized. Plant is running well.
Okay. Sir, one question I want to understand on the write back. Suppose this quarter we have written back 35 crores. So net may, how do we understand how much we have written back? Some provisions must have been made for the other orders also.
Actually, we have written back a figure of 35 crores.
Okay.
Actually, as per contract, provisions are being made, and whenever our defect liability period is over, we reverse the provision for that particular project. So in this quarter, we have reversed one of the major project amount, 35 crore, and we have made some provisions also, but overall impact is negative.
Negative how much? 12 crores?
12 crores.
Okay, 12 crore less we have provided.
12 crore we have reversed because
12 crore
made less. Provision is reversed more.
Okay.
And sometimes it is created, it is positive. Sometimes it is negative. It depends on
Understood. So without reversal, what is the EBITDA in the consultancy business? Margin?
So part of EBITDA, part of operating profit.
Okay. Consultancy EBITDA will be how much separately? 25%?
Basically, it's a segment that we are publishing.
Okay.
The segment profit is 28% in this quarter.
Oh, understood. Thank you. Understood, sir. Thank you. And how is the order outlook, sir? Future order outlook?
Order outlook is good. We'll be touching more than 8,000. We are working towards it. We'll meet the last year's target, and order book has already exceeded with respect to the last one, so it's further going to increase. Let's hope for the best.
What can be the annualized run rate in the turnover, including both turnkey and consultancy? 6,000 crore?
8,000 annualized turnover. Our annualized turnover for the last year is 3,000 crore, and we are expecting more than 25% growth in this year. So it may be around 3,800, 39 crore, 38, 3,900.
Okay. Thank you, sir. Thank you.
Thank you. The next question is from the line of Samar Khandelwal from ICICI Securities. Please proceed.
Thank you for this opportunity. Sir, could you share some color on how our order inflow trajectory is from domestic markets and international markets?
Domestic, we have told you that this year, as of now, we have booked the order worth of 4,000 crores, out of which approximately around 15 or 1,800 crores is from the LSTK segment. The rest is from the consultancy, and consultancy we have overseas has contributed more than 1,680 crores.
Understood. And going forward, how do you see it to be?
We'll be going towards the last year's figure of 8,000 crore. We should cross that. We're already on 4,000 as of now.
Sir, I meant, do we see more opportunities in the international versus the domestic, or how is it? Is it balanced from both the?
International has a lot of opportunities. We are focusing on the international market aggressively. At the same time, domestic market also has opportunities. We are working on them. It is like that. Sometimes these activities, some of the contracts, major contracts we were negotiating has been concluded. Some more we are discussing. It could get realized by the end of this financial year.
Okay. Thank you. That's very helpful. Thank you for the question.
Thank you.
Thank you. We take the next question from the line of Saket Kapoor from Kapoor & Co. Please proceed.
Yes, sir. Only a small clarification. Since we are having this equity investment in Ramagundam only, or Ramagundam Fertilizer, so these are only sir book entries that we have to pass through with respect to the equity holding we have. So even if the company reports the estimated profits which you have been explaining, we will be again booking only book profits. It is only when they declare dividend. Yeah, please correct me, sir.
On the consolidated front, we are consolidating only bottom line figure. Turnover is not being included in the yield turnover, and RFCL has not started the dividend yet. Whenever dividend will be declared, that will be taken into other income.
Right, sir. No, so my question was, whatever losses or profits which we are booking because of our equity investments are only the book entries. There is no actual cash impact on.
That is a part of our consolidated results. Whenever they will declare the dividend, that will come into the company and will be shown as other income in the standalone financial.
As of now, one can understand that whatever 491 crores we have invested, that is the equity as we hold in our stock market. There is no return as of now till they start releasing out any cash. That is what the understanding is.
Whatever loss in RFCL, that is being offset with our profit on the consolidated basis. Equity is intact.
Okay, so we are not getting any advantage from the losses. Are the tax liability on our consolidated numbers get reduced because of those, or they are only the book end?
Nothing.
Whenever nothing. So that is what my question is. Yeah. Other than that, this is only a book entry. It has no other reference.
Yeah, book entry for the consolidated financials. In the standalone, there is no entry because it's a temporary loss. In case it was a permanent loss, then entry has to be provided.
Right. And sir, we have also participated in the rights issue for NRL also in the first quarter. So we have retained our stake only, or is our stake diluted? To what extent?
We are maintaining our percentage, and based upon that, whatever right issues there, we have subscribed that.
Okay. Thank you, sir, and all the best to the team, sir. Dhanyavad.
Thank you. Thank you.
Thank you. We take the next question from the line of Anupam Goswami from Sword Life. Please proceed.
Thank you, sir, for giving the opportunity again. So if you can give us a little color on the whole oil and gas capex in the near term, or how is it in the domestic as well as in international, and where are we targeting our outlook?
If you see that EPCL is investing in the refinery petrochemical complex, investment is around 95,000 crores. Similarly, the Barmer refinery, which was there, it was around 75,000. It is around 72,000 crores. ISL in all has invested around 1.66 crores in various projects, various refinery projects. MENA is investing 50,000 crores. Similarly, you have this ONGC, Gujarat, Jamnagar. They're also investing. They're thinking of petchem project there. It is around 80,000 crores to 1 lakh crores. Smaller various independent refineries could be there somewhere around 1.25 crores, and also there are a lot of opportunities are there. Many studies have been done in past, and those are still under consideration with the clients. So if they get materialized, let's hope for the best. It should be implemented. Also, there has been some issues with respect to the tariff issue which is going on. So some of the private ventures to set up the petchem plants based on the imported ethane, they have got stalled. Until the time this tariff issue is resolved, it will take some time to settle. So when this tariff issue is resolved, hopefully it should get resolved, and then we should see that those investments getting realized in times to come.
Got it, sir. Thank you so much.
Thank you. We take the next question from the line of Mohit Kumar from ICICI Securities. Please proceed.
Yes, sir. Thanks for the opportunity once again. My first question is on the, do you think there will be a dilution on the consultancy margin due to rising international mix? Or is it fair to expect that we'll maintain that band of 20 to 25% margin in the consultancy?
On overall basis, in the domestic as well as international projects, we are maintaining our margin of 20 to 25%, and we are expected to maintain it.
Understood, sir. And sir, will there be any impact of pay commission on next year consultancy margins?
That provision we are already taken in the accounts. So as on a date, there will not be any impact on the financials of the company, but definitely whenever it will be higher, then that will be looked into.
Understood. Last question, Andhra BPCL project. Has the location been zeroed in, and can we expect the next stage of tendering in the next fiscal?
It should be towards the end of this financial year or the early next year. The study is on. We are doing it. So that at this point of time, they are deciding the configuration and some environmental impact assessment studies have been on. So by the end of that study, they will take a decision and take the management approval. Their business decision they will take to implement that project. So it should happen towards the end of this financial year or early next financial year.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you. We take the next question from the line of Pratik Dugar from IntelSense. Please proceed.
Thank you for providing the opportunity again, sir. Sir, you mentioned about the oil and gas capex, and among these, sir, large figures that we hear, what would be the opportunity side that would be, for EIL actually?
So everything, all the figures which we see are the opportunity for us. But it's a competitive work. We will be bidding for them and we get some. But these are the staggered opportunities. They are not coming in one way because it's a large investment. Many of the projects will come in the phases. So we are anticipating that we should be getting good business out of it.
Okay. So, sir, my understanding was that, for these projects, whatever is like the construction, we are handling mostly the consultancy part, or when we take up the turnkey, how are we bidding for that, sir?
No, any of the project, the figures which we have told is the total capex part, which includes the cost of the land and various other costs, including the cost of the plant. Consultancy is very smaller part of it. So we primarily focus on the consultancy services. We don't get into the construction. We are the consultant. We get into the concept to commissioning of that project, starting from the studies to implementation of the same. We get the work done through the contractors. So we work as basically owners, engineers, or a project management consultant, whichever way you say. We are the basically extended arm of the client in implementing that project. But construction is done by somebody else. It's the specialized consultant or the EPC contractors. We are not into the business of construction.
Got it, sir. So just like as a thumb rule, what would be the percentage of consultancy for a given, say, project cost? Can we get a guidance on like what would be the thumb rule for, say, some percentage figure of the total cost of the project?
So it all depends in which mode it is being executed because it could be, if you see the larger project, it could be 2-3%. Our service would be 1 or 2%, 3%, depending on the size of the project. These are the just overall costs which are available in the market. If you talk about 1 lakh crore of the project, it's not actually the complete the cost on which we will be getting the consultancy. We will be getting the consultancy services on the plant and machinery cost of it. So if you see the overall project cost will be 1 or 2% or 3%, depends.
Sure. Thank you, sir.
Thank you. As there are no further questions from the participants, I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Thank you.
Thank you.
Thank you. On behalf of DAM Capital Advisors Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you very much.
Thank you.
Ladies and gentlemen, good day and welcome to the EIL Engineers India Limited Q2 FY26 earnings conference call hosted by DAM Capital Advisors Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Bhumika Nair. Thank you, and over to you, ma'am.
Yeah, hi. Good evening, everyone. On behalf of DAM Capital, I welcome you to the Q2 FY26 earnings call of Engineers India Limited. We have the call today being represented by Mr. Sanjay Jindal, Director Finance, Mr. Surendu Padi, Company Secretary and Investor Relations, Mr. R.P. Batra, Executive Director Finance and Accounts and IR, Mr. Amanpreet Singh Chopra, Senior General Manager, CMD Office and IR, Mr. Vivek Nida, Senior General Manager, Marketing, BD and IR, and Ms. Neha Narula, Senior Manager, Company Secretary and IR. At this point, I'll hand over the floor to Mr. Jindal for his initial remarks, post which we'll open up the floor for Q&A. Thank you, and over to you, sir.
Thank you, Ms. Bhumika. Good evening, everybody, and a warm welcome to all the investors who are attending the investors call. We have declared our financial results for the second quarter ended 30th September 2025 today. Our order book status is has reached its all-time high and stands at rupees 13,131 crore as on 30th September 2025, as compared to rupees 12,145 crore as on 30th June 2025. Order inflow in EIL up to second quarter of financial year 25-26 stands at rupees 3,765 crore. We have declared results of quarter and half year ended September 2025 on 14th November 2025. As regards to financial performance for 3 months ended September 25, the company has registered turnover of rupees 900 crore, which is rupees 676 crore in the second quarter of the financial year 24-25. Turnover from consultancy and engineering segment stood at 411 crore and from turnkey segment at rupees 489 crore. During the current quarter ended September 25, the company has recorded profit before tax of rupees 150 crore and PAT of rupees 115 crore in comparison to rupees 100 crore and 79 crore respectively during the second quarter of financial year 24-25, showing an increase of 50% in the profit before tax and around 45% in the PAT. Notably, EPS for the quarter ended September 25 stood at rupees 2.04, which is September 24 at rupees 1.41. Operating margin during the second quarter of financial year 25-26 stood at around rupees 102 crore, that is 11.3%, which is rupees 47 crore, that is 7%, during the second quarter of 24-25. EBITDA, including other income of the company during second quarter 25 stood at around rupees 160 crore. EBITDA margin is 17% in comparison to 110 crore EBITDA margin 15% during the second quarter 24. In the first half year of 25-26, the company achieved a turnover of rupees 1,757 crore in comparison to rupees 1,287 crore in the first half year of 24-25, showing an increase of around 37%, with turnover from consultancy and engineering segment amounting to rupees 819 crore and rupees 938 crore in turnkey segment. For the half year ended 30th September 2025, the company recorded profit before tax of rupees 243 crore and profit after tax of rupees 185 crore in comparison to rupees 174 crore and 134 crore respectively for the half year ended 30th September 2024, showing an increase of 40%